Anybody?
Good evening, sir.
Okay, good. Good. So you're welcome to Equity Professionals. My name is Wasi Opola, spelled this way. Wasi Opola. I'm sure some of you might have been in my class or know me before now. I'll be taking you through financial reporting. And what I have in front of you is the plan for the diet, which we're going to run through first. So for week 1, which is today and tomorrow, we're going to be starting with conceptual and regulatory framework. So today, majorly, I'll be starting with regulatory framework and also ethics. And there's current and technological development in FR. So find time to talk about the technology in reporting. But today we'll be taking the ethics part as well as the regulatory framework part here. When we are done with that for this week, we'll move straight into IS 16 PP. And for IS 16 on PP, we are going to be looking at, that will take us 3 classes, IS 16. Then, in the same week 3, which is next week, I guess, we would go to intangible assets. When we are done with intangible assets, we go to impairment of assets on IS 36. When we are done with that, we go to investment properties and non-current asset held for sale. That will take us, is a day job. When we are done with that, then we can move to, which one is next? We'll move to group accounts. So group accounts will take like 6 classes. Yeah, 3 weeks, 6 meetings for group account. Immediately we are done with group accounts, then we come back to accounting standards. So we'll finish up with these borrowing costs and government grants in week 7. Then we'll move straight to financial instruments, where we'll learn about financial assets and financial liabilities. Then in week 9, we'll address inventories and IFRS 15 on revenue. And that marks the end of August. Then we'll go to September, where we're going to start with income tax in September, which is this period with 10 income tax. That will take us like 2 classes to finish up. Then in week 11, we do IS 10 and IS 37, event after the reporting dates and provisions. Then week 12, we do IS 33 on earnings per share, 2 classes on earnings per share. And let's not forget there is accounting policies that we must have also touched. Then we move into October, which is the final month of class. We'll start October with cash flow statements, 2 classes. Then we'll move to IS 21. This is a new introduction to your syllabus. We'll move to IS 21. Then, after IS 21, we come to IFRS 18, which is replacing IS 1. That will then catapult us into learning how to prepare financial statements, value-added statements, and 5-year financial summary as required by you. And of course, we'll have done analysis before that period. Then the remaining 2 weeks in the final weekend or week, you'll use it to learn sustainability reporting framework. Then solve more questions on financial. We'll start solving past questions and all of that. But this is the plan. This is like the plan that we have, and I've shared this on your group. So it might change. Somebody might join me along the line, or somebody might not. It depends. Whatever happens, we are fully covered. No issues at all, because we have a plan that is highly realistic and, of course, achievable, which we're going to achieve. So without further ado, let's start with the first class of the day, which is regulatory framework. Let me share my working notes. Please confirm that you can see my new screen.
Yes.
Okay, good. Okay. So what we are looking at as our first topic, which is like a 5% of your syllabus, is what we call regulatory framework. And all we want to talk about here are 2 things. Number 1, we want to talk about the regulations that governs reporting, of course, in Nigeria. And also, we will look at regulatory bodies that, of course, develop these regulations. When we successfully look at these 2 areas, then we would have covered this part of your syllabus on regulatory framework. So starting with the regulations. So of course, I'm sure you know what we mean by regulation. Like in the banking industry now, they are highly regulated. There is the CBN that monitors them. There is even the SEC. They have quite a lot of regulation. But the regulation we are looking at here is that governs reporting generally. So for us, when we talk about the regulation that governs reporting, it's something we call GAAP. And I want to believe that you know that GAAP means generally accepted accounting principles. GAAP. The GAAP is a regulation that governs reporting. That's our own regulation. We call it GAAP. And when you look at this GAAP, there are majorly rules and principles. That's what they are. Rules and principles. And these rules and principles, which is GAAP, we have 3. There are 3. there is the accounting standards. There is the company law, and there is the local stock exchange listing requirements. These are the three gap. Sometimes they call them sources of gap that we have in reporting. This is what guides us in reporting. The first one, which is the accounting standard, they are majorly an authoritative statement that guides entities on how to prepare and present financial statements. They are what helps us in the treatment of transactions and events. It's the accounting standard that does that for us. Any transactions that happen, there is an accounting standard that would tell you how you should treat it. And in Nigeria, the accounting standard we use is called IFRS or IAS. IFRS means International Financial Reporting Standard. IAS means International Accounting Standard. Even though they are having two different names, they are the same thing. Why we're having IFRS, IAS is because before now, we used to have, it was IAS we were having until there was a change in the structure of this, the body that was developing the IAS. So they then agree that going forward, any standard they issue or any amendment to any IAS, they won't call it IAS anymore. They said the result will be calling them IFRS going forward. Therefore, we now have IFRS, and that's why the most recent standard that was issued this year was IFRS 18, replacing IAS 1. So any amendment to existing IAS, they just simply call it IFRS. I mean, then when we had IFRS 16 on leases, it used to be IAS 17. When they amended that standard, they started calling it IFRS 16. But we still have quite a number of IAS. So that's why we say IFRS stroke IAS. They are the same. It's just the situation they found themselves. That's why they are working pari passu. The second one is the company law, which is also a gap that governs reporting. Examples of company laws in Nigeria is CAMA 2020. CAMA is Companies and Allied Matters Act. It is a company law in Nigeria, and it is an accounting regulation because it's the CAMA that prescribes, for example, share capital, the types of share capital a company can issue, how a company can redeem share capital, or how they can even reduce their share capital. It even talks about areas around profit distribution and profit retention, and some other key areas like that. There are a lot of areas where CAMA comes in when it comes to preparation of financial statements. So it is an accounting regulation, really. It is an accounting regulation. Another one is BOFIA, is of 2020 as well. It's a company law, Nigeria, and it specifically deals with banks. And it is an accounting regulation as well, because there's a section of BOFIA, section 15, that talks about banks must maintain a statutory reserve. So when you check accounts of banks, you will see statutory reserve there. Not because an accounting standard says they should do that, but because it's a requirement of BOFIA. So BOFIA also guides banks on how they prepare financials in terms of those reserves they have to ensure they show in their report. It is an accounting regulation. Another one is the Financial Reporting Council Act, also of 2020. It used to be 2011. It was amended in 2020. So this act established the Financial Reporting Council of Nigeria. I'll still talk about them. But majorly, why this is a gap is because it's this act that mandates, that makes it compulsory for all public interest entities, public interest entities to prepare and present financial reports. It makes it compulsory for them. It mandates it for them that prepare and present financial report. It's compulsory. I mean, I'm not saying that other entities are not expected to prepare financial statements. What we are saying here is that the regulation around this set of people, public interest entity, is high. The attention is to them. The attention is to them. So, and the Financial Reporting Council Act then go ahead to say that these PIAs, when you prepare and present your reports, you must ensure that you submit it to FRCN. And now they have an online repository where this annual report are submitted to. Then FRCN reviews it and, of course, get back to them as to its accuracy and reliability. Now, let's not forget, who are PIs? When we say public interest entities, which entities are PIs? They are majorly listed entities, which are entities that are quoted on the Nigerian Stock Exchange or any exchange as the case may be. They could also be regulated non-listed entities in the sense that there could be some organization that are non-listed, but they're highly regulated. Like some banks, for example, not all banks are listed. Some are not listed. But the regulation in the banking industry is very high. So when you have a regulated non-listed entity, we see them as PIAs. Or when you have a PLC, a public limited company, is a PIA. Or when you have any government entity or a government parastatals, like maybe NIMASA, maybe FAN, maybe NDPRA, maybe LSDPC, that of Lagos, name them, any government parastatal, maybe Nigerian Port Authority, they are PIs, right? Or a government contractor who gets contracts from governments above 1 billion naira is a PI. Or you have a private company, a private limited entity whose revenue is greater than 30 billion naira, is a PI. Or you have a concession entity. And do you know whom or what a concession entity are? A concession entity is, let me give you an example, like the Nigerian airport, for example. Now, you see, it's a private company that manages it. So the government has authorized that private company to manage, collect all fees from airlines, collect tolls, and all of that in airport. You see, the agreement between the government and that private entity managing the airport, we call it a concession agreement. That company has become a concession entity, right? That company is a PIE. Or in Lagos, we have Lekki Toll Gate. It's a private company that was collecting those tolls then before the incident occurred in 2020. That company is a concession entity because they have a concession agreement with the government. So when you have a scenario or cases where a public infrastructure is managed by a private entity, there must have been a concession arrangement or an agreement between that private entity and the government. Those entities are concession entities. We call them concession entity, they are PIs. Or when you have a privatized government entity, a government entity that became privatized, like NNPC, for example, now, is a concession entity, right? Sorry, I said concession entity, is a PIE, a privatized government entity. So we can go on and on of whom PIEs are, but these are the major ones. You see, FRCN Act or FRC Act mandates these companies to prepare and present financial reports. But the key thing here for today is the fact that this act is a company law. Also, another company law is the tax law. The tax law, it's a company law, of course, and is a gap, right? Because is the tax law that dictates how we determine most of withholding taxes, VAT, CIT, PIT, and all of that. So, of course, it's a company law and is a gap. So, these are key examples of company laws. And the last one, which is the local stock exchange listing requirements, these documents contains this document contains the requirements companies must meet before they can get listed on the stock market. Okay? And they are usually issued by SEC. So SEC, they have a local stock exchange listing requirement that they will say that, okay, before you can be listed, you have to meet these requirements. You have to meet this checklist. And even after you listed, you have to continue to provide reports to SEC. You have to continue to meet some reporting requirements. You see, all these are detailed in the local stock exchange listing requirements. It is therefore a gap. Okay, so when we are talking about regulations and reporting, always remember these three because they are the source of regulation. They are the accounting regulation that we have in Nigeria. Having said that, let's not forget that I mentioned rules and principles, and I said these three are those rules and principles. You see, that does not mean that rule and principle is a word. It's not a single word. They are two separate words, in fact, they are different. Rules are different from principles. They are not, they don't mean the same thing because rules are set of specific and clear statements on how to do things or execute a task. Clear and specific. And rules are assumed to be understood. It's assumed that you understand it. Therefore, you must comply. If you don't comply, they will penalize you. But you see principles. Principles are usually a general guide. Principles provide you with foundation for you to reason. Principles allows you to use your professional judgments. So we'll not just bombard you with some specific statements. We'll still allow you to use your own judgment and make decision. And a typical example is if you have, what do you call it? Let's say a Google Map, for example, now. Google Map is majorly principles in the sense that when you want to go somewhere and you check Google Map and say, okay, I want to go to this place, what it brings up is options on how to get there. So it tells you that if you pass this route, you spend 50 minutes. If you pass this other route, you spend 30 minutes. So you choose. So it's allowing you to make judgment. And you find out that as we start learning IFRS, you see that they are also majorly principle based. They are purely principle based because they will give us options on how you treat items. They won't, it is not so specific that, okay, this is how you must do it, like that. So you find out that the IFRS is a principle-based framework. Is a principle-based framework. But when you look at this company law, these ones are rules. Company law, all of this CAMA, BOFIA, FRCR, tax law, they don't want you to, nobody needs your professional judgment. They have told you that this is how you should do it, and that is how you must do it. If you don't do it like that, penalize you. The same thing as this one too. They are rule-based. They are rule-based. So that goes to show that in some countries, their own regulation could be purely rules. So that means they have a rule-based framework. While some countries, theirs could be principles, which will go to show that they have a principle-based framework. So depending on how they want to approach theirs. Okay, so that is all for regulations. Okay, so before I leave regulation, I'll give you something to think out. I want you to list 5 and advantages and disadvantages of a rule-based accounting standard. And if you can research on the countries that use a rule-based accounting standard, an example. I've told you about principle-based accounting standard, which is what we use in Nigeria, IFRS. So note this assignment down. I want you to have it in your notes before our next class, which is tomorrow. So list 5 advantages and disadvantages of rule-based accounting standard and principle-based accounting standard. Okay, do we have any question on regulations before we move to the next part? Any questions? Okay, so let us move to regulatory bodies. Regulatory bodies. Now, in Nigeria, the regulatory body in charge of financial reporting in Nigeria, we call them Financial Reporting Council of Nigeria. You see, FRCN. This Financial Reporting Council of Nigeria was established by an act of 2011, and their sole aim is to ensure that companies apply IFRS the right way. When they were created with some key objectives in mind. The first objective is that they should protect the interest of investors and other stakeholders. And it makes sense because this is their primary objective, to protect the interest of investors and other stakeholders. And why is that their primary objective? It's because when you have a body, whose sole aim is to ensure people or companies comply with IFRS. I mean, it simply means that they are indirectly ensuring that companies prepare their reports the right way, which means they're indirectly protecting the investors and other stakeholders, which is their sole aim. Not sole aim, their main aim, to protect the interest of investors and other stakeholders. Number two is to provide guidance on issues relating to financial reporting and corporate governance. Provide guidance on issues relating to financial reporting and corporate governance, which simply means that they teach companies on how to prepare financial reports, on how to apply accounting standards, IFRS to be specific, and also corporate governance. They teach companies about the importance of corporate governance, because without a good corporate governance, it's difficult for financial reporting system to be credible. Because when you have a system where it is one man that is the alpha and omega, that shows that there is no corporate governance within that organization. So this FLCN ensure that, I mean, there is, to a large extent, existence of corporate governance. Number three, to ensure accuracy and reliability of financial reports. They ensure accuracy and reliability of financial reports. So it's like after we have guided you on how to prepare these reports, then prepare it accurately and reliably. So the objective is to ensure that financial reports are prepared accurately and reliably. And that's what they are checking when PIs submit their financial reports to FRCN. They are checking for accuracy, they are checking for reliability. And also, they ensure good corporate governance practices. Good corporate governance practices are used by private and public sector entities. So they ensure they use the best of the best of the best corporate governance practices. And when they do that, it's good for investors ultimately. And they go ahead to ensure high quality of service among professionals. Professionals like the external auditors, like the valuers, the tax consultants. They ensure that they do the right thing for company, best quality of service. And that is why all of these professionals has to be registered with FRCN. Whether you are providing other assurance services or audit services, register with FRCN. And also, they harmonize the activities of professional bodies. Professional bodies like ICAN, like ANAN, like CIBN, like CITN. All of these organizations, they harmonize their activities and they ensure that they are doing the right thing. Because like ICAN, for example, now, they are the one that certify people that become accountants. They are the one that would test them to see whether they are doing the right thing. They are the one that would continue to monitor members in practice. They are the one that gives licenses and all of that. So the guys that monitor them is called FRC. They harmonize the activities of those professional bodies. And ultimately, see, all of these things they are doing would eventually improve the credibility of the financial reports. It improves the credibility of the financial report. So I've given you 7. At least you must know 4 or 3 for your exams. And it's highly testable. You don't want to joke with this. You don't want to joke with it. So at least remember this to protect the interest of investors and other stakeholders. That's their primary objective. Then they provide guidance on issues around reporting and corporate governance, and they ensure accuracy and reliability of financial reports, and they ensure good corporate governance practices are used by private and public sector entities. Now, the way FRCN operates, they have different departments that deals with different areas that they handle. Like they call them directorates. They have the Directorate of Accounting Standards for private sector. They also have Directorate of Accounting Standards for public sector. They have Directorate of Auditing Standards. They have Directorate of Valuation Standards. They have Directorate of Inspection and Monitoring. They have Directorate of Corporate Governance. So each of these directorates deals with this specific item. So they are the one in charge of accounting standard, which is our focus. They are the one in charge of auditing standards in Nigeria, valuation standards, inspection. They go out for audit and all of that, and also corporate governance. Okay, so speaking about regulatory body, this is the regulatory body. This is the objective. These are the areas they deal with in terms of directorates. As far as financial reporting is concerned in Nigeria, is the FRCN that's the body in charge. The buck stop with them, FRCN. So now this should just be it when it comes to IFRS or regulatory framework as far as this topic is concerned. But you see, the reality is that what FRCN did in 2011 was to adopt IFRS. In fact, they don't develop IFRS. There's another body that develops IFRS entirely. You have to know that. ICAN can ask it. So there is an international body that is actually responsible for developing IFRS. And it's not just a single body, like group of bodies working together. We call them IFRS Foundation Structure. We call them IFRS Foundation Structure. And you see, this IFRS Foundation Structure, it comprises of the following. Number one, who is the head of that structure? We call them monitoring board. This monitoring board, their major activity is to ensure that this body or this structure is publicly accountable. So their focus is public accountability. That's the focus. That whatever they do it in public interests, and they can account to the public why they are doing everything they do. public accountability. So this monitoring board is there for that, public accountability, and to provide leadership. They don't do anything, they don't involve in any technical work, but they appoint the technical guys called trustees of, IFRS Foundation. So the body itself is the IFRS Foundation. The people are the trustees of the IFRS Foundation. And these trustees are the technical people in this structure. They are the one that understands business. They are the one that have good knowledge of accounting, finance, bookkeeping, auditing. They know all of this. They are technical people. And they have international exposure because, of course, they are developing standard for global companies, international entities like that. And when they established these trustees, they established them with four objectives. They had four objectives in mind. So the objective of this trustee, the first one is to develop a single global high quality accounting standards, or IFRS, accounting standards in public interest. That's one of their key objectives, that we want to develop a standard that every country of the world would be using. Develop a single global high quality accounting standard in public interest. So if somebody asks you which body is responsible for developing IFRS, of course, that's the IFRS Foundation, because that's their objective. Now, the second objective is to promote the use and rigorous application of the standard. Not just you, yes, you have developed it, but now you need to promote it. And they have done this one very well. Because right now, over 100 countries of the world adopt IFRS. All countries in Africa uses it, Europe, North America, South America, most companies or countries in Asia use IFRS. So of course they have done this part very well. The third one is, their third objective is to take care of the need of SMEs in emerging economies. To take care of the need of SMEs in emerging economies. So this objective helped them because they focused on emerging economies, Africa, Asia, North America, all those emerging economies, they focused on them, especially their SMEs, and they used that to capture them. So that fostered the adoption worldwide. And finally is to promote convergence and harmonization of international accounting regulation. Why this is necessary is the fact that they understand that not all countries would be willing to adopt their standard. And that's why they say that, okay, whenever we are faced with scenario where a country does not want to adopt our standard, that we can converge with them. We can harmonize our standards. We can make it similar. Okay, and that's what they are trying to do with the United States. The United States of America is not adopting IFRS, but what this foundation is doing is to ensure that IFRS is now similar to the FAS, which is the standard in the US, and they're doing that pretty well. Most of the new standards they are issuing now is seriously similar to that of the US, so they are moving well, hand in hand. Okay, that's the trustees of IFRS Foundation. Now, these trustees of IFRS Foundation, they they appoint some bodies to work for them. They appoint some peoples to body. In fact, they have bodies that work for them. And number one of these bodies is the IASB. Number two is ISSB. Number three is IFRS Advisory Council. These are the bodies that work for the trustees. These three. You see, the IASB, I mean, listen, you see, ICAN can ask you the objective of IASB. Don't hesitate to give them this. Because the objective of this foundation, IFRS Foundation, becomes the objective of these guys as well. Okay? Note that first. Then you need to know that what the IASB did was to delegate the work of developing IFRS or IAS to the IASB. That, okay, you are in charge of IFRS. And when we say IASB, the full meaning is International Accounting Standard Board. International Accounting Standard Board. Okay, they are the one that has been saddled with IFRS. Okay, the IFRS Foundation appoints them to do that for them. Then there is the ISSB, which is the International Sustainability Standard Board. International Sustainability Standard Board. The ISB, the IFRS Foundation appoints these guys to be in charge of sustainability disclosure standards. Sustainability disclosure standards. So, of course, part of what I'll be teaching you is sustainability reporting framework. So these are the guys that develop the standards around that. ISSB. And there is the IFRS Foundation, the IFRS Advisory Council, who, of course, from their name provides advice, but the basis of that advice is that they usually serve as a formal link between the bodies. When I say the bodies, I mean the ISSB and the IASB and professionals in practice. In the sense that whenever the IASB or the ISSB is working on a project and they need to get data from the public, they go to the IFRS Advisory Council. It is the IFRS Advisory Council that will help to obtain those data from the public. That's the major work of the IFRS Advisory Council, a formal link, okay, between the bodies and professionals in practice. They help them get information, they help them get data that they can use to do their work. So that's IFRS Advisory Council. Okay, lest I forget, you see this IASB, under them, we have IFRS Interpretation Committee. We have IFRS Interpretation Committee. Of course, from the name, these ones provide interpretations on IFRS. They provide interpretations on IFRS. And does that mean all IFRS has interpretations? No. In fact, before an interpretation would be pronounced by this committee, it will be a situation where there is a conflicting opinion or around the application of an accounting standard. So when we have different people arguing around how an accounting standard should be applied, then the interpretation committee will come up with, okay, this is how you should go about it. okay, this is how you should apply this standard, something like that, right? So that's what IFRS Interpretation Committee are built to do. Or if you have issues or transactions in practice where we don't have an accounting standard for, that there's a transaction and we don't have an existing accounting standard for them. Yeah, the IFRS Interpretation Committee will also come up with guidance on how such transaction can be treated pending when we get an accounting standard for it. So that is where their interpretations are useful. That's where they come up with interpretations. Okay, so that is the IFRS Foundation structure. Okay, they are the ones behind IFRS. From the monitoring board, who provides leadership and ensure there is public accountability, to the trustees of IFRS Foundation, who develops the standards, to the IASB, who has been saddled with that responsibility of developing IFRS, to the ISSB, who develops sustainability disclosure standards, to the IFRS Advisory Council, who helps these guys get information, opinions, comments from professionals in practice, and to the IFRS Interpretation Committee, who usually provide interpretations where there are different opinions around the application of an accounting standard, or where there is no standard on the transactions or events. The IFRS Interpretation Committee come up with an interpretation for those. Okay. And you see, one thing I need you to look at is this monitoring board. When you dig deeper, you see that this monitoring board usually comprise of capital market authorities. Capital market authorities. And these capital market authorities are like SEC, like the SEC we have in Nigeria, Securities and Exchange Commission. So the SEC of major countries all over the world, they are represented on this board. Okay? Because they believe they are the one that understand the reporting requirements of listed companies and major companies in the world. Okay, so that's why they are the one that provide leadership and public accountability, because they are representing the market, something like that. Okay, before I move on away from this topic, we need to then understand how this body develops this IFRS. So let's quickly talk about steps in developing IFRS. The step one, we call it agenda consultation. Agenda consultation. That's step one. So when they want to develop IFRS, the first thing they do is to consult, is to interact with professionals in practice in order to identify whether there are accounting problems that needs to be solved. And they do that by consultation. I mean, this step one shows that the process of developing IFRS is not about some set of genius sitting in a corner and writing the standards. No. It's in fact an open and transparent process that everybody is involved. Everybody is saying what they're doing. And they ensure that the best brain in the world is represented. The best brain in the world is involved in this process, just to see that we get the best of accounting standard. Okay, so that's what this step one is showing us, agenda consultation. They consult first. They ask the public, they ask the people, do we have any accounting issue? And usually when they do this, they codify it in a work plan. They call it a work plan. There's a document. So you see them periodically having a work plan meeting. Okay, this work plan meeting, what they would be discussing here are majorly accounting problems that needs to be solved. Okay, and they do that until the end of 5 years. They'll give it 5 years. So after 5 years, they will sit down and look at the work plan and see which of these accounting problems you have been codifying and identifying for the last 5 years. Which of them should we develop an accounting standard on? Which of them, or is it everything? It depends on the decision they want to take. So ultimately, they would sit and plan and identify which of those accounting issues is paramount. Then that would then take them to step 2. If they're able to identify an accounting issue, then they will go into research mode. We call that research program. So they will carry out a detailed research on that problem. And when you have a research problem, I mean, the essence of is to find a solution using empirical reviews and all of that to find out if this problem can be solved and if it's actually valid. So usually they come up with a paper. They call it discussion paper, which is the outcome of their research. And this discussion paper, they will send it to the public for everybody to review and read. Everybody will review and read this discussion paper. People will bring in their comments, their opinions. The ISB will review it. They will refine it. So usually when they send it out like that, it will be out for, I think, 90 days. People would talk about it, comments. They are noting it down. Then they would note it. So ultimately, the end result from this step 2 is that they would then be able to say, yes, this is an accounting problem and there is a solution for it. Or no, this is not an accounting problem and there is no point working on it. Something like that. That's the product from this research program. So if the end result of this research program is the one where they say that this is not an accounting problem and we don't need to work on it, that means they won't go ahead. But if it is an accounting problem that has a solution, they go to step 3. We call this standard setting program. So in step 3, this is the stage where, in fact, the first thing they do in this stage is to come up with a proposal for an accounting standard. They come up with a proposal for an accounting standard, meaning that accounting problem that they have agreed that they have solution to, then they would write down the accounting treatments they are thinking about, how they believe it should be treated, the recognition, measurement, and all of those things you'll be learning very soon. So that proposal, they will call it exposure drafts. These exposure drafts, they would also send it to the public. Okay, they send it to everybody in public. People would review it, people would look at it, people would comment which ISB would get. They will use it to refine these exposure drafts. If they are satisfied with the new position, fine. If they are not, they will send it out again to people to look at it again, to make further comments. So they'll continue this refining. And at every point they send it out to the public, it's out there for 90 days. They will give people 3 whole months to look at it. You see, ultimately, it could take years in some instances. Ultimately, this becomes the accounting standard. Of course, in this case, IFRS. But they won't stop there. They will still go to step 4. which they call maintenance program. And in this step 4, what they are doing is a post-implementation review, checking whether people can easily apply this standard and identifying practical difficulties in applying them, which they will bring to the fore and ensure this resolved and ensure that it's resolved. And that's the end of this topic, regulatory framework. Before you go, you're not even going anywhere because we have one more topic. Now, which body would assist from all these bodies we learned here? Which body do you think would help in this post-implementation review where entities are having practical difficulties in applying this standard? Which body will have helped them to resolve that practical difficulty? Anybody? Anyone?
I think
I
it's the
believe it's the
IFRS Advisory Council.
Okay, IFRS Advisory Council. Okay, any other attempt?
IFRS Interpretation Committee.
Okay, that's the correct answer. IFRS Interpretation Committee. That's correct. So, because I told you that they are the one that provide interpretations where there are different opinions and all of that. But what about these discussion papers, exposure draft that they are sending out to the public? Who will have helped in doing that? Who will have
the
helped in doing
advisory
that?
council.
IFRS Advisory Council.
That's correct. IFRS Advisory Council. Okay, good. That means you are following. Okay, if you have any questions now, you can ask because I've come to the end of this topic. I will just give you another assignment again. I want you to list seven reasons why regulation is necessary. Why regulation of reporting, of financial reporting is necessary in Nigeria. It's 10 marks. It's not 7 marks. That's your second assignment today. Okay. Any questions? Any questions from anybody?
Hello, sir.
Okay.
Hello,
Yeah,
sir.
go ahead. Yes, I'm with you.
Yes, sir. My name is Anayo. Please, I just want to get a specific, or let me say, a relevant body that if this advisory council are sending their, maybe like if it is a questionnaire to the public, is it
Yeah.
a street persons or there is a specific corporate bodies, like let's say banks or government parastatal that they are sending their invitations for comments or inquiries while
Good
conducting their jobs of advisory to the body.
Yeah, good question. So they send it to those that are registered on their websites. So if you go to ifrs.org, register on their websites, they send it to those people to actually attend to it. It's a very popular website. Most accountants are aware. So if you want to also get those exposure draft working papers, you can always go there. And even if you're not registered, you can easily go to their website and download most of these exposure draft and discussion papers that are current. They're always there available. So that's how it works.
Okay, sir. So I also have a question.
Okay, Joseph, go ahead.
Yes, sir. So under trustees of IFRS Foundation, that is their role. You did mention of to promote convergence and the harmonization of international accounting regulations, where you explained that there are some maybe countries that may be reluctant to join the body. So what they do is that they harmonize to, as in with their own accounting standard. My question is, in the course of harmonization, won't there be a compromise in the standard of the body? Yeah, like you give example of United States.
Okay, so good question, right? Very good question. So the way it works is, so majorly that harmonization has been operational with the US in terms of developing and tending their standards towards the US standard. So of course, there would be there are some things that they will try to let go because, I mean, US is a powerhouse, so they will really want them on board. But since they're not having them on board, they want the regulation to be close to that of US. For other countries, the way they do this harmonization is to try and ensure that those other countries adopt what we call their conceptual framework, which I'll be teaching you tomorrow. And this conceptual framework is what they use in developing standards. So when those other countries adopt those conceptual framework, then they're sure that they will have similar standards, because the outcome of their standards will then look similar. It might not be entirely, but at least it will look similar because the key items will be treated in a similar manner as that of the IFRS. But the issue of developing standards at the standard level, right? They are only doing that with the US. And of course, there will be some, I mean,
Thank you, sir.
yeah. Any other questions? Anybody?
Yes, sir.
Are you guys here? Okay. You're also around.
Yes, sir.
Okay, good. Let's continue. Okay, so for the few minutes we have left, let us look at ethics in reporting. And the only reason I'm looking at this at the very beginning of this diet is because of the sensitivity of what you'll be learning in this class. You'll be learning accounting principles. You'll be learning standards majorly, how you treat assets, how you treat liabilities, how you prepare financial statements, how you consolidate, how you calculate EPS. I mean, very sensitive issues. That gives you some level of power, because you will then have the serious knowledge of how financial statements are actually prepared, which means that you would have that skills to the level that if you want to manipulate results, it will come easy for you to a large extent. We know that. ICAN knows that. And that's why now in every course, they teach ethics. They teach ethics to remind you that amidst this power you think you have as accountant, you must ensure that you do the right thing. You must ensure that you don't mislead the users. If you do, there will be implications. And in most of the diets, most of your questions, you find them asking you questions on ethics. They will tell you about somebody doing the wrong thing, and they will ask you what's the ethical issue involved, and they would look at how you respond. Now, I'll quickly tell you how to respond. Well, firstly, ICAN has some code of ethics. Also, IFAC. I mean, they really adopted from IFAC, International Federation of Accountants. And these codes contain fundamental principles. These are principles that uphold us accountants. And it upholds you guys too, because you are registered with ICAN. We see you as professional students, right? So when you guys pass all your papers at the professional level, and you clear all your papers, you become a qualified student. So you're still a student until you get inducted, where you become a CA, a chartered accountant. So compliance with these fundamental principles starts now. It doesn't start later or in the future. It starts immediately now. And what are these fundamental principles? There are 5 of them. Number 1 is integrity. Number 2 is objectivity. Number 3 is professional competence and due care. Number 4 is professional behavior. Number 5 is confidentiality. These 5 are fundamental principles that you must always remember, that must always be at the back of your mind as professional students until you become chartered, right? The most abused one is this last one in our profession. You guys have to not do that, because whether you work as an accountant in business or as an auditor, an external auditor, a tax consultant, see, we are privileged to a lot of data about our company, about our clients. We see everything. We see it. You see, this data you have it because you are acting on behalf of that entity. And you have to only use it for the reasons they were originally meant for. You cannot disclose it to a third party that you are not authorized to disclose it to. When you do that, you're breaking this fundamental principle of confidentiality. So data that you get as a result of you acting on behalf of your client or your company, you cannot disclose it to another party. You must not do that. That's confidentiality. You do that, in trouble, because they will get you. So this is us telling you, and ICAN will ask you, they will tell you about a guy that he sends information to his friend because he wants to use a template. You cannot, and they will tell you why you're supposed to. You need to first tell them that this is wrong because this is against, it would impair its confidentiality. It could to impair the principle of confidentiality. Now, another principle that we uphold very seriously aside confidentiality is professional behavior. There is a difference between are you an accountant and you said you were an accountant. There's a huge difference between those two questions. So if somebody asks you, are you an accountant? I mean, they have seen some qualities in you that looks like that of an accountant, whether the terms you use, the way you dress, the way you talk, and all of that. Make them see you as somebody responsible and say that this has to be an accountant. Or, but you said you're an accountant. That means they have seen you that you don't even possess the quality you claim to have. Say you're an accountant and you're behaving the way you should not. Accountants has to be professional in every ramification. The way you talk, the way you dress, the way you do your work. You know, as accountants now, you cannot be arguing with conductor and the bus again because they didn't give you change. You now start fighting. Just walk away peacefully and don't allow them to stain your professionalism. Cannot be drinking pure water on the road again. It's a professional student. You go and drink your pure water in your house, not the road. You will not appreciate that. And especially, this is corn season. A lot of you wants to eat corn. Yes, it's your corn, but in your private space, don't be eating corn on the road. Yeah, yeah, yeah. What's that? Don't do that. If we catch you, be in trouble. That's professional behavior. You have to behave in an exemplary manner that people will look at you and say, you're an accountant. That's what we want. People that represent us well. And it starts now, you being a professional student, so that you're already used to it when you're qualified. The next one is professional competence and due care. You see, any project you're involved in, you need to put in your best. You need to ensure the outcome is the best possible that the client can get or that your company can get. You have to continually develop yourself in the most recent skills that are applicable in practice so that you can deliver the best possible outcome. You guys are still professional students, so we are teaching you, it's still very fresh. But mostly when you become qualified, most of these things we are teaching you would forget. And which is why ICAN ensures that they continue to train you. So when you qualify and become a chartered accountant, ICAN ensures that you have at least 120 credit hours every year, meaning you need to have been involved in an hours of training worth 120 hours in a year. And it's important, it's compulsory for every accountant. So in a way to continue to ensure you are professionally competent is a fundamental principle. Then we have objectivity. You cannot allow undue influence of others to affect your professional judgment. Don't allow your boss to tell you to treat an item wrongly when you know it's wrong. That's an undue influence. It should not affect your professional judgment. You need to do things the right way. You cannot do what is wrong. You have to always do what is right as far as reporting is concerned. The number one, which is the very subtle one, but it's the most important because it's what defines you, integrity. I mean, that's being honest, being straightforward. That's what defines you. There is nothing that can make a man than being a person of integrity. It might not be now, but later in the near future, I mean, it's going to define you and catapult you into success in a very short term. Integrity, it cannot be overemphasized how important it is. So you have to possess this quality. You see, these five are the fundamental principles that you need to make sure is part of you. You need to always remind yourself of it as we navigate through this class. You need to always remember that these are our principles. Now, in business, in practice, you will be faced with a lot of events, a lot of occurrences and circumstances that would want you to question these principles, that would want you to go against these principles. So we have identified them for you. We call them ethical threats. There are also 5 of them. Number 1, we have the self-interest threats. Number 2, we have the self-review threats. Number 3, we have the intimidation threats. Number 4, we have the familiarity threats. Number 5, we have the advocacy threats. So, looking at the first one, self-interest threats. Events or circumstances that will present or that are threats, that are self-interest threats, are events whereby you would want to do the wrong thing just for you to have a financial gain. That you prefer to do the wrong thing because of your selfish interest. Because if you do the right thing at that point in time, you will lose something. For example, you work with a company that they say that you will get that way if the company makes a bottom line or a profit of 10 million, everybody gets a bonus. Fine. So at the end of the year, you have worked out your accounts. So the company was coming to around 10.9 million. You were happy that at least you get something. Then you remembered that there is a customer that is owing you guys, and you discover that the customer is faced with issues around he has some financial constraints. So that financial constraints resulted in the customer being that he might not be able to pay. And there is a standard in reporting, which you know, which of course, let's assume that you know, a standard in reporting that requires that when a customer is faced with such scenario, you need to make a provision or allowance for receivables, which we technically call impairment of financial assets. And making that impairment will mean that you are going to expense some portion of that receivables. You put it to P&L. And when you do that, that's 11 point something million profit will fall to 9.2 million. Are you going to book that impairment or not? If you don't book it, you have done the wrong thing, just so that you can have financial gain. If you book it, you will lose that bonus, right? That's a self-interest threat. It's a circumstance, it's a situation that is an happening that you then need to make a choice about doing the right thing, because you have to do the right thing. So whenever you're faced with issues where you know that if you do the right thing, you will lose some gains, some benefits. I mean, it's better to just lose that small benefit now and win big later. Do the right thing. You have to do the right thing right from the beginning. So that's self-interest threats. Okay? So when you see that kind of scenario, quickly identify that is a self-interest threat and you go against it. You do the right thing, you remain objective, and keep your integrity intact. The second one is self-review threat. And this self-review threat is the events or circumstances that would present it to you is where you'd prepare a data or an information, and you are now part of the team that would approve that data or review it. You were the one that prepared it. You're now part of the team that would approve or review. A typical example is budget preparation or forecast. So let's say you are the head of finance in a company, and you are the one that would prepare the budget. When you did your budget, you would Of course, they will approve it. They presented it to the management, then they will sit down, discuss, approve. You are part of that management team. So during the approval process, a lot of people were coming out to puncture that budget that you prepared. Then you became defensive. That's a self-review threat. You cannot be defensive. You have to calm down and listen. Otherwise, you will not allow reason to prevail because you believe you are the one that did it. So nobody can be wrong, right? Something like that. That's a self-review threat. Or let's say you are the auditor of a company and you're now also the tax consultant. Meaning that when you do your tax computation, you're still the one that will audit it. That is self-review threat because you're not going to find fault in that your computation. If it had been a scenario where you were the tax consultant and another company is the external auditor, they can find fault because they will review it critically and they will always find fault. There is always differences really in practice. So that's self-review threat. Avoid it. That's why it's advisable that you should not be the tax consultant and the auditor at the same time. You should not prepare a data or an information and you are being the same person that will review. Avoid those scenarios. It's going to affect your even objectivity in some cases. Another one is intimidation threats. And this is common with bosses. When you have boss or a client that are always telling you you will lose your job, you will lose the clients if you don't do this, if you don't do that. No problem. Let them go now. Because otherwise, it's consequential, right? It has consequences if you key into or go and do the wrong thing because of an intimidating boss or an intimidating client. So when you have that scenario, you are faced with an intimidation threat. Then we have familiarity threat, which is where an auditor, for example, becomes so close to a client that his objectivity might be impaired because of that. That's why relationship between auditors and clients should be highly professional, just so that the client will not come asking for favors. Or when you start accepting gifts from a client, that you cannot say no to whatever the client asks subsequently. You need to, and even it's, in fact, we encourage that avoiding any gatherings that is so personal, except maybe burial. That one is a sad gathering, so you can go. I'm just joking. But really, familiarity threats happens when you have too much close association with your clients that can impair your objectivity. Advocacy is advocating, is speaking for or in favor of your clients or your company. There's nothing wrong with that. Speaking for in favor of your company, it's fantastic, it's good. It becomes a threat when you're speaking on something you have no knowledge about. What I mean is this. You're promoting your product, that product can do A, B, C. And you yourself, you don't use that product. You haven't confirmed that product can do that A, B, C. And you're promoting it on their behalf just because they are your client. Right? That's advocacy. There's a threat there because you could be wrong. So you need to scientifically have tested, used, and be sure that what you're advocating is right. Or you are testifying in favor of your client in the court of law without properly checking that what you're testifying for is correct. Something like that. That's advocacy threat. So you're going to be faced with all of these threats in exams. They can give you case to tell them which threat is this. or they can even ask you to list these threats for us and give short explanation for them. But they really do exist in real life, and you might find them in your exam. Now, because it's something you would always find, when you are faced with them, what do? I'll call that safeguards. Safeguards, how do you safeguard yourself against these threats? What you can do, number one, is to communicate with your line manager about the ethical issue. So if it's a scenario of a boss that is intimidating or a review threat, discuss with the person involved, the line manager. If the line manager is your boss, then, or is the CEO, then that means if it's a structured company, then let me call that escalate. Escalate the ethical issue to the audit committee of the board. So you escalate that ethical issue to the audit committee of the board for consideration. And I'm sure at this level it should be resolved. They would have ensured that that wrong thing does not scale through. They would have ensured that. But if they are also unethical people, then you need to escalate externally. You have to escalate the ethical issue to professional bodies or regulatory bodies, professional bodies like ICAN, for example, or your regulatory body like FRCN, for them to intervene. And I mean, you should not work with that kind of company. As a last resort, you might consider resigning from that company. Resign if you have to, you get another job. It's so easy to get another job. Okay, this is the summary of ethics in reporting that I need you to keep somewhere, have it in mind as we go through, as we navigate through these diets. And there are some questions, cases that you will need where they will give you scenario around the company doing the wrong thing. Then you should be able to tell them that this company is faced with these threats. Or they could give you a case where your friend is asking you for a template, and you remember that one of your clients gave you this fixed access schedule. I can send it to him now. No, that becomes a familiarity threat, right? And which can affect confidentiality. So it's better you just don't go ahead with that. Don't send such information to your friend. Okay, so it's already 7 o'clock. I'm going to stop here for today. Tomorrow, our class has been moved to 7 o'clock. Is that 7 okay for you guys? Do I have my students here?
Can we do same time, like 5 p.m., 5 to 7 as well?
Okay. So you want it earlier, right?
Yes.
What is it?
7 p.m. is okay, sir. This will do 1 or 2 before that time.
Okay, that 7 p.m. is okay for you. Okay, so that's the challenge you would have. Since when Mr. Adejuwon shared it, nobody complained, so it's just okay. But since I can see that we have a lot of time in between, so even me myself, there are sometimes I would not be within Lagos. I might go outside of Lagos in the morning, and I don't know when I'll come back, but I'm sure I'll be home back before 7. There are some weekends I will not go. So I will really need you guys to open your mind on those Sundays. There are some Sundays I could just say, okay, guys, let's start early today so that we can cover a lot. I mean, there's nothing wrong with finishing your syllabus as early as possible. So you can do 3 hours, solve questions, and so we could say, okay, let's start by 3 o'clock today. Let's do 3 to 7. Be ready to agree. It's a 17 weeks project. That's something about ICAN. The syllabus is wide, a lot to read, a lot of assignments. It takes your time, not only your time, your money and all of that. So you're here with us at Equity. You have to be very patient. See, patient. Yeah, patient. Because we're also going to demand a lot of cooperation from you, because we are very dedicated to ensuring that you do not fail. At any point in time where a lecturer or whoever wants to give you additional opportunity to learn more, please always attend to it, because this is not something that goes forever and time runs very fast. So if somebody says, guys, let's do, like I could see a conversation on PSAF class where the lecturer was saying he had a meeting at 8 for today. Yeah, today. And he said, okay, can we do 7 to 8? I mean, I would have expected that he just say, okay, let's do it. It's just today. Since I've agreed to do this project, I mean, let me put in my very best and ensure that I cooperate with my teachers. Whatever they want to give to us, let me just cooperate like that. If I have to wake up early, 7, let's do 7, then you move on like that. So you are going to have a lot of scenarios like that. I mean, it's good it happened earlier. I'm telling you guys, you have to try to be flexible and be ready. Don't miss classes. I mean, in class today, there are just 14 of you. I think on the group, you guys are more than this. So some people are already missing classes, which is very bad. So over time, we will see that as the diet moves to the middle, a lot of people will start giving up. That one is common. Like almost 70% of the class will give up. I mean, I don't know why that numbers are very up like that. So a lot of issues result into that. And the common one is the fact that a lot of you will not read. And a lot of you might be doing more than one course, 3, 4 courses like that. And by the time you look at the syllabus, after 6 or 7 weeks, you will have done a lot. And these things we are doing is not something easy like that. It's something you need to sit down and read very well. They're wide. And a lot of you will not read. You not read today. You are just piling everything together until it dawns on you that, I can't cope anymore. Then you'd have to drop one paper or the other. And if you had started reading little by little, like today now, all the things I taught you is no more than 3 pages. And this is how to read. If the way I've jotted it down like this, I jotted it for my head, you too can sit down and write it like this on everything they are teaching you every day. You cannot fail. It's not possible now. It's not possible. Just do this. I just look at it. It's just simple. So when you check the handout now, it's plenty because I explained everything I'm saying, everything I've mentioned in this class. It's like I've converted it to, that's what you find in your notes. That's why the note is lengthy. But this is just the key points. If you can also do something like this, key points, be able to write them down. Okay, this on every topic, every day. You can't feel it's not possible. But by the time the thing becomes so much, so I'll be sharing these key points with you if you need it. So just so that you also can use it as a key point. You can also use it to just make your reading very fast. So it's going to help you to a large extent. Okay, so let me save all this to, we're going to be having our orientation very soon. In the middle of July, we should have it. I'm going to advise you on how to ensure that you don't give up in the middle. You have started, every one of you have how you want to finish. Don't change your mind. Don't change your mind. because of your inactivity, right? So ensure you see it through. I would really hope you all see it through. Again, it's a 17 weeks project for us. We have a lot of work to do. I mean, a lot of work to do together, including us. So, and it has started already. I've given you assignments. Go and do it. Go and start reading. It has started. Before you know it, 17 weeks is over. I mean, tomorrow now is the second class. That means for me, week 1 is gone. For me, I will just ensure I'm meeting my targets, I'm ticking. It's so easy for me to meet my targets, something I've been doing for a while, so I'm very good at it. No issue for me. But for you, the bulk of the work stops at your table. Ensure you're able to deliver, and I'm sure you can. Okay, so let's stop the class for today. I will see you guys tomorrow. Bye.